The world is watching. Every eye, from bustling city centers to quiet rural towns, is fixed on this historic moment. After years of economic sparring, the United States and China have signed a new trade deal, sending ripples through global markets. This agreement, finalized in May 2025, promises to end a costly and disruptive trade war that has impacted millions of lives and businesses worldwide. The central question remains, is this a lasting peace or just a pause in a much larger conflict that could reignite at any moment? The answer affects everyone, from farmers in Iowa who depend on stable exports to factory workers in Guangzhou whose livelihoods are tied to global supply chains. This isn't just about politicians shaking hands, it's about the real-world economy, jobs, and the future of international cooperation. The US-China relationship is the most important bilateral relationship of the 21st century, shaping everything from technology to climate policy. When these two economic giants clash, the world feels the tremors, stock markets react, and trade routes shift. For years, tariffs and uncertainty have raised prices, disrupted businesses, and left consumers and entrepreneurs anxious about the future. This new deal aims to reverse that damage, restore predictability, and rebuild trust between two superpowers. But the path to this agreement was long and difficult, filled with failed negotiations, broken promises, and moments of high tension. Understanding that history is key to understanding what this deal truly means for the world today and tomorrow. Tonight, we'll break down what this deal really says and what it could mean for your future. We'll look beyond official statements and political spin, searching for the real impact behind the headlines. We'll explore the fine print, the compromises, and the potential loopholes that could shape the next phase of this relationship. The story of the 2025 US-China trade deal is about the future of the global economy, and the stakes could not be higher. And the next chapter is just beginning. The world holds its breath, waiting to see what comes next. To truly understand today's deal and its significance, we need to look back at the complex history that led us here. The US-China trade war didn't begin overnight. It's rooted in decades of China's rapid economic rise, transforming from a largely agrarian society into the world's manufacturing powerhouse. By the late 2010s, the US trade deficit with China had ballooned to hundreds of billions of dollars annually, fueling growing concerns in Washington. Critics argued this imbalance cost American jobs as companies moved production overseas, hollowing out entire communities and industries across the US. The conflict officially ignited in 2018 when the Trump administration accused China of unfair trade practices and launched a new era of confrontation. The US cited forced technology transfers, intellectual property theft, and state subsidies as core issues, claiming these practices gave Chinese firms an unfair advantage. Tariffs were imposed on hundreds of billions in goods, and China retaliated with its own, targeting key US exports like soybeans, cars, and other agricultural products. This tit-for-tat escalation marked the start of a global trade war, sending shockwaves through international markets and supply chains. An attempt to de-escalate came with the limited Phase 1 deal in early 2020, offering a temporary pause in hostilities. China promised to buy more US goods and make some reforms, but the deal fell short of addressing the deeper structural issues at play. The COVID-19 pandemic and other global disruptions made it nearly impossible for China to meet its ambitious purchase targets, further straining relations. More importantly, the toughest issues, technology transfer and state subsidies, remained unresolved, leaving the core of the dispute untouched. The Phase 1 deal was a band-aid, not a cure, offering only temporary relief while deeper wounds festered. The stage was set for continued friction, uncertainty, and the growing realization that a more comprehensive agreement was desperately needed. The world watched and waited for a real solution, as businesses and governments braced for what might come next. That solution, however, would take years to arrive, as the world's two largest economies continued their uneasy standoff. The years after the failed Phase 1 deal were marked by deep and persistent uncertainty, casting a shadow over the global economy and leaving investors, businesses, and workers on edge. Tariffs remained in place, adding up to 25% or more to the cost of imported goods and making everyday items more expensive for both businesses and consumers. Small businesses faced tough choices: absorb the higher costs, raise prices for their customers, or scramble to find new suppliers, all while trying to stay afloat in a volatile market. American farmers lost China as their top market almost overnight, with crop prices plummeting and many facing the real possibility of financial ruin or even losing their farms. U.S. government aid provided a temporary fix, offering some relief, but it was never a long-term solution to the deeper problems caused by the trade war. Chinese manufacturers also suffered as U.S. orders dried up, leading to factory closures, mass layoffs, and growing economic anxiety among workers and their families. For consumers, tariffs meant higher prices on everything from electronics to furniture, and even basic household goods, squeezing family budgets across the country. Studies estimated that tariffs cost the average American household hundreds of dollars per year, with some estimates reaching even higher as the trade war dragged on. The trade war forced companies to completely rethink their global supply chains, searching for ways to reduce risk and avoid future disruptions. The old model of maximum efficiency, sourcing wherever was cheapest, was suddenly upended, replaced by a new focus on resilience and flexibility. Companies began diversifying, adopting a China Plus One strategy, opening new factories in Vietnam, Mexico, India, and other countries to spread out their risks. This shift was massive and expensive, reshaping global manufacturing and forcing companies to invest billions in new infrastructure and logistics. The pain was global, affecting workers, businesses, and governments everywhere, and the pressure to find a solution only grew more intense. But deep distrust and lingering resentment made negotiations difficult, with both sides wary of making concessions. The world economy was caught in the crossfire, with growth slowing and uncertainty rising. Something had to give. What changed in 2025? Years of economic strain pushed both sides back to the table. In the US, inflation and slow growth made tariffs politically toxic. In China, a property crisis and slowing exports made the trade war unsustainable. Negotiations began quietly in late 2024, away from the media spotlight. High-level envoys met in neutral locations, focusing on specific, manageable issues. The priority, a phased approach, starting with tariffs. A shift in leadership tone was key. Both Biden and Xi signaled a willingness to compromise. Negotiators were empowered to find solutions, not just restate grievances. The final weeks were tense, with disagreements over technology and market access, but the economic cost of failure forced compromise. The 2025 trade accord is a product of pragmatism. Neither side got everything it wanted, but both got enough to declare victory. The deal stopped the economic bleeding. It's not perfect, but it's a turning point. The world exhaled. So, what's in the new deal? The centerpiece is a phased rollback of tariffs. Over 18 months, both countries will gradually lower tariffs on a wide range of goods. Some tariffs remain on sensitive products, but the de-escalation is significant. The deal also tackles non-tariff barriers. China will streamline approvals for U.S. agricultural products. China commits to stronger intellectual property protections. The U.S. will ease some restrictions on high-tech exports, except for military uses. A new consultation mechanism is established, biannual meetings to resolve disputes before they escalate. This formal process replaces confrontation with conversation. But the deal leaves big issues unresolved. Chinese subsidies, cybersecurity, and advanced tech competition are set aside. The 2025 accord is about fixing immediate economic problems, not solving the strategic rivalry. It's a trade deal, not a grand bargain. The hard questions remain for another day. For now, it's a step forward. For most people, the impact is simple: prices. With tariffs rolling back, expect prices on many goods to stabilize or even drop. Everything from smartphones to furniture could get cheaper. For businesses, the deal brings certainty. No more guessing about sudden tariff hikes. Small and medium-sized companies in particular can plan and invest with more confidence. American farmers are big winners, regaining access to China's massive market. As Chinese tariffs on U.S. agriculture fall, demand and prices for American crops are set to rise. Rural communities could see a much-needed boost. The stock market has already responded positively, with trade-dependent companies seeing gains. This lifts retirement accounts and investment portfolios for millions. The deal doesn't solve every problem, but it brings relief to wallets and businesses alike. Stability is good for everyone. The economic mood is brighter. The 2025 deal signals a shift in global manufacturing. During the trade war, companies diversified supply chains, investing in Vietnam, Mexico, and India. The New Deal slows this exodus. Lower tariffs mean less incentive to leave China. But the lesson of over-reliance on one country remains. China plus one is here to stay. Companies will keep diversifying to manage risk. Emerging economies now face tougher competition for investment. They must compete on infrastructure, skills, and efficiency, not just tariff advantages. The deal creates a more level playing field, challenging countries to step up. The new model balances cost, risk, and reliability. Supply chains will be more complex but also more resilient. The era of cautious globalization has arrived. Despite optimism, challenges remain. The deal includes a 90-day implementation review, a probationary period to build trust. Enforcement is the biggest test. Will both sides honor their commitments? The new consultation mechanism is unproven and lacks strong enforcement power. If dialogue fails, tariffs could return. The deal sidesteps deep strategic tensions. Technology, security, and geopolitics remain unresolved. Domestic politics could also threaten the deal. Hardliners on both sides may push for reversal. The accord is a product of today's climate. Future shifts could put it at risk. Its survival depends on continued political will in Washington and Beijing. The peace is fragile. The 2025 US-China Trade Accord is a pivotal moment. It brings relief, lower costs, stability, and new opportunities. But it's a truce, not a peace treaty. The real issues, technology, security, and the role of the state, are paused, not resolved. The deal buys time for dialogue, but the hard work is ahead. Success depends on good faith and compromise. The world must encourage cooperation and uphold fair trade. The global economy's stability hinges on US-China relations. This agreement offers a path away from conflict. It's a fragile path, but for now, it leads toward peace. The story is far from over.